Wanted to go through Warren Buffett's 1957 letter to his individual investors. He was running a series of separately managed account partnerships, basically out of a spare bedroom of his house when he got started managing money. And he says here, regarding the general stock market picture of 1957, in last year's letter to partners, I said the following: my view of the general market level is that it is priced above intrinsic value. This view relates to blue chip securities. This view, if accurate, carries with it the possibility of substantial decline in all stock prices, both undervalued and otherwise. In any event, I think the probability is very slight that current market levels will be thought of as cheap 5 years from now. Even a full-scale bear market, however, should not hurt the market value of our workouts substantially. So I want to, bring up the S&P chart from that time period in the 1957 letter. So he was writing this at the end of the year, and he was talking about what he said in 1956. He felt market values were elevated. Well, that makes a lot of sense because from late 1953 to 1956, the general indices base more than doubled, actually, from 22 to 48 on the S&P 500. And then towards 56, it started to grind sideways. So he was looking for a major correction. And what's interesting too is Buffett is well known for saying spending time on trying to guess what the market is going to do is a complete waste of time. And here, as he was starting out, that's exactly what he was doing. But we will say he was pretty decent at it, because in 1957, the market did in fact correct about 21% off the 1956 peaks. Where he was incorrect was the fact that the probability that I think the probability is very slight that current market levels will be thought of as cheap 5 years from now. Well, 5 years from now would have been 1962, and the market appreciated another from 48 peak to, well, at the end of 1957, when he would have been writing this letter, almost doubled, about 80%, up to 72 by 1962. So it just goes to show it was pretty clear that the market had moved a lot in a short period of time, and his call was correct in 1956 to end of 1956 to expect some weakness. There had already been weakness, about a 10% pullback, it looks like, before he was writing that letter, and they got continued weakness that year. But the idea that what many people were probably looking for and calling for at that point, including Buffett, was that stocks were going to roll over. This was unsustainable. And keep in mind the recency bias coming out of World War II, coming out of the Depression, etc. But in fact, the market did follow through, and it went up materially more.